Good morning, everyone. I like that they tried to get you guys all fired up. That's good. All right, well, Paul V, I can say it. Veradittakit.
Veradittakit.
No, see, I did it.
Nice.
Well, welcome to your first Meridian.
Yes,
I hope this is not your last Meridian.
this is one of many. I'm so excited to be here.
So you heard Jason just say that you guys were the first to sort of go all in
Yeah.
blockchain. Any lessons from that, or how did that like come about? And what do you want to tell?
Yeah, so Dan Moorhead started the firm. He's got a traditional finance background. He came from Princeton, Goldman, and he learned about Bitcoin actually from his brother. His brother was mining Bitcoin in 2011. His brother is an astrophysicist, and he dabbled a little bit, but it wasn't until 2012, 2013 through a some of his friends. I guess it's called a sort of a Princeton mafia now. Pete Brigger, Mike Novogratz, and Dan all together in the same dorm. Like they decided to go big on Bitcoin, and um, Dan bought 30,000 Bitcoin at $65, and he calls it the greatest trade of his career. But he just felt like there was just so much disruption with Bitcoin being a better store of value, and he considers Bitcoin digital gold, but much better in terms of just being able to be transported, potentially being used as a way to just make payments at the time and things like that. And now it's really just a better gold, and that's how Pantera got started, which is solving the problem that Dan had at the time to actually buy that Bitcoin. He went to Coinbase to buy Bitcoin, and they said you can buy $50 worth of Bitcoin a day. And he's like, well, it's going to take me a long time to buy millions of dollars of Bitcoin. So why don't I set up a fund that makes it easy for high net worth individuals and institutions to buy Bitcoin? And we set up the Pantera Bitcoin Fund, which is now at over 100,000% returns. And that really just kicked off Pantera as, we are going to provide access to Bitcoin and then eventually venture capital within the ecosystem. So that's the start of Pantera.
Wow, that's so. And you've been there for 11 years.
I've been there for 11 years since 2014. My background has been now I'm hitting almost my 16th year in venture capital. It's been such a wild ride to imagine that I'd be a career venture capitalist. Beforehand, I started off my career as an economic consultant, and then I started doing business development and growth for some early stage startups in I don't know if you guys remember the Daily Deal era, Living Social and Groupon. And so I was within that space, sort of the kayak.com for daily deals, and then found my way into venture capital through investing into mobile, which I thought was, such a disruptive form factor, and then morphed myself into becoming a crypto investor. I also saw the potential of Bitcoin, but even just beyond Bitcoin, I saw the potential for decentralized technologies to enable folks to be able to send value across borders faster, cheaper, and more transparently. And it's the vision that Stellar has run with and has actually accomplished. And this is what got me excited. I didn't get excited about people in US making a lot of money by speculating on Bitcoin. I got excited about people being able to send money across borders, especially within developing countries, to be able to see their relatives get a lot more money for what they should receive. So that's really what got me excited. It was really transforming banking in the emerging markets.
And when we think about, so you guys have been all in our space for the life of the firm essentially.
Yeah.
And when I look at like what's happened over the last, I'd say like 4 years, 5 years, there are a lot of people who say, well, venture has actually done a disservice to this space and caused the space to focus on a lot of things that maybe it wouldn't have focused on if it hadn't. How do you respond to that?
Yeah, no, I mean, I'd say the biggest pushback was probably during 2017 and 2018. It was a fascinating time and a lot of lessons learned where we started to have tokens be used for capital formation, and people were able to raise capital with a token and be able to build their decentralized project. And, retail got involved during that time, and, VCs had a bit of an advantage through these private rounds. And, without lockups and whatnot, I mean, people were taking profits, and it was giving a bad rap for VCs. Well, that has changed quite a bit.
Mm.
The investments are still there in private companies. Decentralized projects are still there, issuing tokens, and that is going to be happening more in the U.S. We can talk a little bit more about that, but it does look more like a venture investment. There is more alignment between the entrepreneurs and the investors, and with that, there's also just brought a lot more visibility into what VCs are really doing behind the scenes to really help grow these companies, similar to what they do with companies that they invest into on the equity side. So, maybe just to make things a lot more tangible, I can talk a little bit more about what we do here at
What do you
Pantera.
guys do?
So we are investing into companies and taking, significant stakes in companies. On the equity side, we take anywhere from 10 to 20%. On the token cap,
Was there a cap for you?
there isn't a cap, but we definitely want to make room for partners out there. We know that to build a company, it takes same thing with raising a family. It takes a village. And so while we want to be incentivized to, and we'll talk a little bit more about what we do, but we know that there are partners that are good at, providing value that we can't provide. And one example of that is, we actually do 40% of our investments are overseas. And to do overseas investments, especially in Latin America, we want to find a local partner.
Yeah.
It's very tough to navigate regulations. It's very tough to navigate uh, company building, recruiting, marketing. Oh my gosh, we don't talk about marketing, but like it's a different animal to market in Brazil, for instance. So we want to partner with local VCs, local angels, local influencers, and
If
you
you
need
don't
to
leave the space to do
you gotta leave
Yeah.
them space to sort of get into these rounds and have skin in the game. So and then on the token side, we maybe just on average like get like 5 to 10% of the token cap table, about half.
Wow.
Because usually there's like a ratio of like 1 to 2 in terms of equity versus tokens. And then from there, I mean, we take a board seat if it makes sense. So I actually have a board meeting after this. So, very, very hands-on with our companies. And then we also have a platform team. So the way that I and Pantera have thought about platform is, you know, crypto is a different animal. There are things that we have to focus on a little bit more than traditional like startups. And a couple of things. I mean, there's some overlap. Like we have a head of recruiting. Everybody needs to.
And do you think that's just because it's still nascent, or do you think it's just because
There's just different nuances, and things will normalize. But recruiting, business development, market development, very similar. What is probably a little bit different is on the marketing side. So we did hire the former head of marketing from BitGo. And so she does sort of your traditional marketing, but also we have this thing called KOLs and influencers and things that are helpful
and
for.
they help the portfolio businesses?
They help the portfolio business.
Okay.
These are all portfolio services. And then we have something called research and tokenomics.
Mm.
Tokenomics is definitely a function that you don't see in traditional
Yeah.
traditional startups, and it really helps design these tokens to really like have value, especially for fundamental investors. And then another function that we do is on regulations. Hopefully that'll be
So you have like the policy function internally that you then
exactly.
support the portfolio businesses with.
Exactly.
Mm.
Those are the 5 pillars that we do. And then we have like team members underneath those verticals to really just provide, just more support for them. We actually have this really cool program called Pantera Catalyze, which is knowing that there's going to be a lot of research and a lot of new technologies that maybe it's like zero knowledge proofs, maybe it's privacy technologies that, people are talking about now, especially as institutions are coming into the space. Well, we want to make sure that we can, in AI and things like that. So we actually have a partnership with a lot of like Cornell, Berkeley, Stanford, and we have this program where we match PhDs from some of these top universities with some of the top foundations and startups to be able to hopefully come up with like cutting edge research and papers to really further, the intersection of research and decentralized technologies. And it's been a really fun program. Maybe we'll get some really cool companies that spin out of it, but maybe we'll just get some really amazing thought pieces that can really just spur more technologists to kind of come into our industry.
So when you talk about those 5 pillars that you have for each of the portfolio businesses, do you find that they actually leverage them, or do you have to push them? Or are founders like, "Oh my god, this is amazing," or do they not really know what to do with it?
I would say the ones that are most active on utilizing those resources are the ones that scale faster and are more successful. It's like with any partnership, right? Like the more that you can know what's available in front of you, the more proactive you are in extracting those resources. The faster that you can really sort of, scale and succeed. And same thing with I mean, obviously the ones that you have board seats with, like you're a little bit more governance, a
Yeah.
little bit more hands-on, but the ones that we don't have board seats on, like we have 265 companies.
How
We've
many
hit on
people at Pantera?
80 people,
Okay.
265 companies, um, a a platform team that's, almost 10 people. And then beyond that, like we've, every single IPO that's hit the market, we've been a part of.
Huh.
And so we've seen what it takes to get from zero all the way to exit. So you should utilize the
Yeah,
resources
so does
and
it go
knowledge.
that you guys have to ping them, or are they, like, reaching out constantly to you? Like,
You know,
the folks that you've already invested in?
yeah. So we actually train our portfolio companies to be very institutional in terms of our relationship. So depending on where they are in terms of their life cycle, we will set up at minimum quarterly meetings, but I would say like for some monthly or even weekly meetings. It really just depends on like where they are, how experienced they are, and those sort of things. We actually have teach-ins and tutorials around how to create an investor update, what you should sort of put in there. We create Telegram and Slack groups with like different members of our portfolio team, depending on what sort of needs that they have. We have events specifically for our portfolio companies. For instance, we had a IPO teach-in with Goldman
Hmm.
Sachs. We knew that there are about 20 to 25 companies within a portfolio that could potentially go
That they
public.
were at that place.
Exactly,
Yeah.
exactly. We've done a go to market how to launch a token webinar with all of the companies that are potentially going to launch tokens soon. And we had folks that have already launched a token share their experiences on what it sort of takes,
Mhm.
how the sauce is sort of made within these different exchanges and whatnot. And it's the forum for them to sort of share ideas and best practices. That's very, very valuable. And for those that have boards, we actually have a board deck template
Oh, that's
that they can
awesome.
kind of go through. And the other thing that we do is whether it's marketing or whether it's recruiting, just some examples of some of our experts, we don't want to do all the work for them. We don't want to do all the hiring for them. We teach them
Yeah.
how to like we teach them how to build a team that can do all of this themselves.
Yeah, those are the hard things, I'd say. In terms of when you're focusing on, is it a different area for you when you're focusing on an investment, like at Series A, Series B, seed? Like, what are you looking for?
It all comes down to team. At the end of the day, is this CEO, is this team hungry to build a business that we think is going to be successful? Now, this differs for every investor. Like, if you're an angel investor, you could be fine with a $100 million exit if you're getting in at a $3 or $4 million valuation. Like, that's a great return. But for us, I mean, if we are investing at the Series A, where the valuations could be anywhere from 50 to 100 million, just, knowing the size of the Series A these days,
Yeah.
we are looking for a multi-billion dollar exit. So do these founders have the stamina or the ability to sort of see where the puck is headed? Are they open to listening to feedback? The most successful companies that we've been a part of have been the ones that we've been most involved with, not the ones where, we talk to them once a year. And so if they're not listening to feedback, then it just might not be the right fit for us. Maybe it's a fit for someone else.
Yeah.
And it's the entrepreneurs that can understand what they're good at and what they're not good at yet, and how do you fill that gap?
Yeah.
And then from there, we'll look at like, what the market is, right? Does it fit in our thesis? Because at the end of the day, you can you can get the right thesis right, but you could be wrong on the timing. Payments makes a lot of sense, right? But like probably not in 2014. There wasn't this thing called a stable coin yet that made it a lot easier. There wasn't regulations like the Genius Act to make it a lot more comfortable for enterprises and institutions to really get involved.
But do
And
you
so
feel now that space? Because it's one of the areas. I mean, I think the same thing in terms of Stellar. We were like way ahead of our time, and we focused on
Jed was a venture partner at Pantera,
yeah,
and he was part of Ripple. He started Stellar. Like it was a vision that's been around for a long time, and we're seeing
finally
Stellar.
seeing it happen. Now it's like a thing. So when you think about that now, like payments, focusing on like tokenization, like what kinds of things are you looking at for, or are you seeing that are interesting to you?
Yeah, so we obviously are interested in the underlying technology. So Stellar. If what you see here is exciting, which you should see, you should get exposure to Stellar and the underlying protocol. And then, of course, it's the companies building on top because at the end of the day, it's going to be we see it as like you're either at the extreme bottom, like the protocol layer, or you are at the application layer that's interacting directly with the consumer or the enterprise. Because if you're interacting directly with the consumer or the enterprise, you have the ability and the relationship to potentially like create a much larger customer value and be able to sort of upsell on different services. That's why like your new banks and other folks are very valuable because they continue to sort of figure out ways to monetize. So we are looking for companies and applications that are directly interfacing that may not even mention that underneath it's being powered by crypto and Stellar, but they're really like hammering in this is faster, cheaper, and it's just a better experience because it's all being controlled by decentralized technologies that don't have to run on antiquated banking rails. And there is no such thing as like, we need to hold your money because we're doing something else with it. It's completely transparent. It's faster. And, that's the sell to the end consumer. We've talked to a lot of end consumers that are looking to send payments, and what they do is they actually test out the options and they look at what gets you the most money at the endpoint at the end of the day.
Mhm.
And then that's the number one priority for them. And it's got to be on top of Stellar and decentralized technologies. And then, of course, the second thing that they'll think about, which they'll probably sort of compare two different products that are using similar rails, is like, what's the better experience, right? Is it like Venmo, or is the onboarding kind of clunky and whatnot? So it's really about like the bottom line, and it's really about the product itself. Like you want people to really just like love the product.
Mhm. Couple questions. Cash flow positive or showing growth in users?
When you're early, it all depends on like what stage you're in. But like, look, I mean, if you have capital and you see product market fit, optimize for growth. Again, like part of that also is finding the right partner, the right investor that is supportive of this longer term vision of what you're trying to do and is supportive of that growth and might say, look, I mean, if you run into some problems along the way, we will support you with resources, capital, and things like that. But, you know, we have a goal to dominate a certain vertical, a certain sector, and you just have to run as quickly as possible.
Now, spending money on hiring like a formal team and a team structure or just being super scrappy and getting shit done?
It's a tough thing to balance between like whether you want to build something on your own or whether you want to partner. I think it just comes back to how much capital you raise and your investor, and it is always great to have things in house, to have the control within your grasp. But sometimes sometimes there's a path to getting there. And, if you let's just I'll give you an example. I mean, you want to build a brokerage. You start off with the brokerage and you may partner with an exchange because at the end of the day, you don't have the liquidity yet. But liquidity is so important for you to be able to execute on building a great brokerage. And you may not have raised $100 million right away to do everything at once. So build the best brokerage, build the best experience, make it very easy to, onboard using Fix or Apple Pay or whatever is convenient for your local geography, and partner with the exchange or maybe even a bunch of exchanges. And maybe your advantage is really just, better pricing too. And at a certain point, those exchanges are making a lot of money from you. And you might say, well, look, I mean, thank you so much for your liquidity. I have my own liquidity now. Build my own exchange. I started building my own lending desk. I started building, my own, tokenization platform. You just keep on going and going and going. But you have the customer relationship. And because you have the customer relationship, you can do a lot of different things.
Okay, and then now I have some money, but I want to like execute and I want to get to this like number for users, but I get a lot of money thrown at me. But I feel like it might be too early to take this like big check. Let's say you.
You know, it's a great position to be in. It's a great position to be in where you can have capital that wants to come in. I think you have to really understand what what is your goal before you raise capital, and are you at a point now where you really need that capital? Some folks are at a certain point where you have a great product and technology, and you're not there in terms of product market fit yet. So, why take the capital? Just focus on just building a better product so that naturally you can like see that the product itself is already enough to sort of generate referrals and things like that. And then you test a little bit of marketing and you're like, oh, wow, like this is what works. And then it's the right time to raise capital because, you could take capital right now at maybe a $20 million valuation. But if you start getting some of the flywheels going, you could raise at 50 million and take less dilution and maybe find a better partner. At the end of the day, valuation is one thing, but it's really about finding the right partner. That's the most important thing because while it's great to always, continue to raise, double the valuation every single time and you hit hockey stick, but there are times where there might be an FTX that happens or there might be a crypto downturn and folks that aren't aligned with you, folks that maybe haven't invested into crypto and just started to invest into crypto right now and they might get a little bit spooked. They're going to focus on things that they understand and know, and it's not crypto. And then it's just going to be very tough for you to, raise more capital or even come up with innovative strategies because there's just not a lot of attention that's being paid to you. So you really have to find the right partner that's aligned that will be in it on the highs and in the lows.
Okay, you convinced me. I'm not taking money. Just gonna,
I'll only take it from Pantera.
yeah, I'm just gonna take from it. Okay, so you're raising Fund Five. Fund Five.
Yeah.
Fund Five. That's great.
Yeah. 5 funds. I mean, it's tough to get to this point. $1 billion fund. We've grown to 80 people. We have expanded strategies. We're doing digital asset treasuries now, which is a new strategy. We just launched a digital asset treasury like earlier this week, HSDT.
It
And
was for the other S chain, not ours.
I didn't mention the asset, but you mentioned it. So it's exciting. We are doing a lot of things that are innovative, and we're bringing back to our portfolio companies too. So it's pretty fun.
So we're inches away from becoming an LP in the fund. We love what you're doing. We bring you in and you get to meet all the people here at Meridian, but also in the Stellar ecosystem. Tell us what you can bring to that and why. I mean, for me, it's a really important piece to be able to bring people like you into our ecosystem to learn about what we're doing.
We're super excited. Again, this is the beginning of something really special. Again, started 2014 when Jed was a venture partner here at Pantera, and we're excited about payments. We're excited about the technology, the use cases, excited about the entrepreneurs that are building on top. I've met so many of them already, and I'm already just like, oh my gosh, like we need to follow up. We need to do some more together, and so we're excited to invest into the ecosystem. we're excited to see, other use cases that pop up too. Outside of payments, we're excited about artificial intelligence. We're excited about DPIN. We're excited about all the different things that, you know, crypto can unlock. And so, yeah, I mean, this is just the start of something special.
All right. Well, thank you, Paul. Thanks so much for coming.
Thank you. Thank you.
We're going to head off, guys. See you later.